Is paying for insurance really just a massive scam? In theory, insurance should be really simple. You pay a little money each month, the company holds onto it, and when something bad happens, they've got your back with a big lump sum of money waiting to help you out. So then, why isn't it this simple? Why don't people trust insurance companies? Why does everyone hate them? And if insurance companies really are doing some shady shit, then how the hell do they keep getting away with it? By the end of this video, you're going to know everything you need to about the insurance industry and how, for a business built on trust, it's done just about everything to lose it. Let's dive in. In theory, insurance is a beautiful idea. Everyone chips in a little money. When something bad happens to someone, that collective pot pays to help them recover. It's like an emergency fund, but for the entire community. Let's say we've got 10 people in our community. They all drive cars and pay for insurance. When someone has an accident, the insurance company has a bunch of money waiting for them. So far, so good. Sounds fair. But things get messy pretty quickly. Because that insurance company is not a charity. It's not a government organization with the sole purpose of helping people. It's a for-profit business, which means they only make money when they don't pay you. Every claim that gets denied, delayed, or underpaid is pure profit. So their entire incentive structure is completely upside down. They're not in the business of doing good. They're in the business of making money. And they make the most amount of money when they don't have to pay you. Quite literally, a wolf in sheep's clothing. They wear a facade of safety and good intentions while behind the scenes, they're one of the most profit-hungry and predatory industries in the entire world. So profit-hungry, in fact, that these days they're functioning more like hedge funds than safety nets. Let me explain. If we go back to our little 10-person community example, as the insurance company, we've got 10 people paying us insurance premiums every month. Let's say $100 each. And on average, we have one car crash per month, and we pay out up to $500 per crash. So in January, we take in $1,000 from our customers, we pay out $500 for a single accident, and we have $500 chilling in our account. February comes along, same thing, $1,000 in, $500 out, we now have $1,000 chilling in our account. This bank balance starts to add up over time. So what are we going to do? Are we going to leave it sitting there in cash earning a pathetic little interest rate from the bank? Absolutely not. We're going to invest it. And so insurance companies have become some of the biggest investors worldwide. In the US alone, insurance companies now sit on around $9 trillion worth of assets. Around 60% of that sits in bonds, very safe corporate and government debt. Around 13% is in stocks, 9% is in mortgage loans and property, and about 6% is in alternative investments like private equity, hedge funds, or private credit. So not only do they have a bigger pile of cash sitting in the bank when they don't pay out claims, but they also get to invest those dollars to earn even more money. The logic for the insurer is simple. The longer they hold onto your money, the more they can make from it themselves. Again, in theory, this is all pretty fair. Rather than sit on a pile of cash that's decreasing in value due to inflation, let's invest it and we'll have even more money to help people in the case of emergencies. Well, that's exactly where the shit hits the fan, because they don't pay people their money to help in case of emergencies. And here's how they get away with it. Here's the tactics these scumbags use to get out of paying you your money. 1. Delay, delay, delay. The easiest and most common tactic, delay and deny. They'll lose your paperwork, ask for new documents, request extra medical records, or claim they're waiting for a third-party assessment. None of which is actually going towards verifying your claim. It's simply to exhaust you until you give up or settle for less. After Hurricane Katrina, for example, tens of thousands of homeowners fought insurers for years trying to make claims, but many eventually settled for pennies on the dollar because they couldn't afford the lengthy legal battle. Tactic 2 is reclassify the risk. So first they write sneaky rules and clauses into the fine print and then they use them to screw you over. Oh, your car was stolen. Well, technically your policy only covered vandalism. Oh, your roof caved in. Seems a lot more like wear and tear, not storm damage. It's the oldest trick in the book. After Katrina, thousands were told their destroyed homes weren't covered because the flood caused the damage, not the wind. Health insurers do the same thing. They'll reject a surgery or medication as not medically necessary, even if your doctor prescribed it. And some companies even use AI systems that auto-deny claims in under 2 seconds without a human ever looking at it. Basically, anytime you file a claim, there's a good chance your insurer's first move isn't to help you. It's to figure out what word they can swap in to make sure you don't qualify. Tactic 3, use your data against you. The scumbags have started calling it personalized pricing. What it really means is constant surveillance. Your car insurance app, it's not just tracking your speed, it tracks what time you drive, how fast you turn, and how hard you hit the brakes. You regularly drive at night or in high-risk neighborhoods? Congrats, you've just scored a 30% premium hike. Same goes for health and life insurance. They're now tracking your fitness data, your medical prescriptions, and even your social media. Missed a gym session last week? Smoked a cigarette last month? Awesome, your risk profile just changed. And it's not just passive data collection. They actively buy data from brokers. Health insurers, for example, will purchase consumer databases showing what food you buy, where you travel, and whether you pay your bills on time. Why? Because all of that helps them predict how profitable you are as a customer. And let's say that data makes you seem high risk. They're not going to outright deny you. That'd look bad. They'll just quietly raise your premiums until you can't afford to stay insured. And they'll label it risk-based pricing. And when all else fails, tactic 4. Bury you in bureaucracy. They know you don't have time or energy or money to fight them, and they use it as a weapon. Resubmit the same form 3 times, wait on hold for 2 hours, get transferred through 5 different departments. Some companies literally have internal metrics for how long they can delay before a customer gives up. After Hurricane Ian, thousands of homeowners in Florida were stuck in this exact nightmare. Months after the storm, they were still waiting for basic claim assessments while the insurance companies quietly filed for bankruptcy, leaving families homeless and unpaid. You need to realize that this is not some fringe tactic, it's an industry-wide strategy. There's even a phrase for it: delay, deny, defend. Delay the claim, deny the payout, and defend the decision in court until the customer breaks. And if you do have the time, money, and patience to take it to court, they've got a full legal team ready to drag the process out for years, knowing that by the end of it all, you'll probably settle for pennies on the dollar just to make it stop. Which is tactic 5, lowball and settle. So once they've exhausted you mentally and financially, they'll come back with an offer that's technically a payout, but nowhere near what you're owed. Your $20,000 car that just got wrecked? Well, our independent appraisal valued it at only $11,000. Take it or leave it. Oh, your house burnt down. Okay, well, the policy only covers replacement cost, conveniently ignoring the fact that construction prices have doubled since you bought your plan. And the sad thing is, most people take the offer simply because they're exhausted. But something that's always confused me, how the fuck do we know that these guys do all this shady shit and yet they're able to get away with it? Well, let's find that out. Alright, quick question. If someone started selling knockoff versions of your brand tomorrow, how would you even know about it? And if you did know about it, would you know how to stop them? That's where Trademark comes in, the sponsor of today's video. They make protecting your brand ridiculously easy. You basically just give them your brand name or logo, pick your countries, and they handle the rest. First up, they'll do up to 4 in-depth trademark checks for free. Not some auto-generated AI scan. Actual lawyers go and dig through the databases to find anything that might cause problems. Things like identical names, lookalike logos, or even legal red flags. You literally just type in your brand name and they come back with whether you're good to go or if there's something you should fix before filing. If your name's clear, registering it is literally just picking the countries you want to protect it in, and boom, Trauma files it for you. It doesn't stop there though, because once your trademark is live, Trauma actually monitors it everywhere. Social media, online stores, even app marketplaces, to make sure nobody's stealing your name or logo. If they find anyone's being a prick and stealing your stuff, their legal team steps in and helps you take action immediately. So if you want to protect your brand before somebody else does, check out Trauma in the link below and go get your brand trademarked in literally the easiest way possible. Big thanks to Trauma for supporting the channel. So how the hell do they keep getting away with it? Short answer, the system is built to protect them, not you. For starters, insurance regulation is a complete mess, especially in the United States. Unlike banks or airlines, which are regulated at the federal level, insurance companies are mostly regulated state by state. 50 different sets of laws, 50 different regulators, 50 different definitions of what counts as fraud, fair, or unreasonable delay. And so if a company gets caught screwing customers in Florida, they just keep doing business in Texas and California and wherever else. Then we've got regulatory capture, and this is the revolving door stuff we touched on in my previous video on Congress. The people regulating the industry will receive massive job offers to leave and beat the laws and regulations they helped write. And people within the industry get massive dollars behind them, end up with a seat at the table of the regulators, and run the show from the inside. And it's not just regulators. Insurance companies spend millions in lobbying and political donations every single year. According to Open Secrets, the industry spent over $160 million in 2024 on lobbying, more than oil and gas and more than defense contractors. So the people who are supposed to be protecting you are also taking campaign donations from the people screwing you. And then there's forced arbitration. Buried deep in almost every insurance contract is a clause that says you can't sue them in court. you have to go through arbitration, which is a private process run by a neutral third party. Ah, yes, the good old neutral third parties that get paid by the insurance companies. According to the American Association for Justice, consumers win less than 20% of arbitration cases. And then when the regulators do put on their big boy pants and fine an insurance company, the penalties are piss poor. State Farm once paid 250 million fines for denying hurricane claims. That same year, they still managed to pull 3.8 billion in profit. And so the cycle gets to continue endlessly. Deny, delay, lowball, and if you fight back, drown you in red tape. And if you somehow manage to survive that, arbitration, legal loopholes, and pussy regulators waiting right behind it. So yeah, insurance is supposed to give you peace of mind, but the truth is it's an illusion of safety. You're not paying for protection, you're paying for hope. The sad part is, we need them. Because in a world where hospital trips cost as much as houses and natural disasters wipe out entire towns, you can't not have insurance. So we keep paying month after month, and that's the evil genius of it all. They've built a system where they win if nothing happens, and they still win even if everything goes wrong. So, is insurance a scam? Well, if someone takes your money, promises to do something in return, and then does a bunch of shady shit to leave you worse off when you needed them most, what the f else would you call it? That's all for this video. Hope you enjoyed. Please remember to like, comment, and subscribe, and I'll see you in the next one.